Hello everyone, it's me, the Boss Hog. I've been away for a few weeks, changing jobs, taking some time for myself. Come back, there's almost a month to update on, so let's do it. Alright, so because you haven't had a video from me since the 14th, there's quite a few days to catch up on. First of all, in terms of the big jump there on the 2nd of the 11th, that's really just a reflection of where I was changing jobs and taking some time to myself. I just wasn't checking my portfolio, so there was no day end number for me to record. I use this from Google Docs, and I just wasn't around to check or update Google Docs. So the big jump there on the 2nd of November, that's effectively looking at, a couple of weeks worth of catch up. However, the big jumps toward the end are very legitimate and genuine. They just reflect very strong days in the markets, basically. And to be honest with you, would have been even stronger, but I was at the whims of adverse movements in foreign exchange. Still, though, super happy. This meant that my portfolio returned to relatively comfortably green. And we'll have a look at what companies were driving that, because there's a couple that are really outstanding, one in particular. I've also introduced this table to the right. To me, I've done this for two reasons. First of all, it's a useful reconciliation point between my Google Docs and basically this is figures taken from my brokerage, so Trading 212. Literally, I just log in, it tells me what the value is in each one of my accounts, and together they make up the overall value of my portfolio. So sometimes things like FX differences when I'm using Google, and also like buy sells don't always get updated. It can make a little bit of a difference. Out of interest, I did a sort of soft reconciliation this week, and it would have been about 80 quid out. So relatively small in the scheme of things, and I just think it's good to actually do my real portfolio. So that number there, that 115009, like I say, that's taken directly from Trading 212, and I'm going to present that moving forward as well, just to check, I guess, and be transparent in terms of where I'm at. There's no new capital added. I had hoped to start adding capital now, but where I took like 3 weeks almost between jobs, that's no income for me. My wife does work, but I still have a small majority of our income, so there's just not too much money. That as well mixed with a few things that I wasn't expecting. I got a tax bill. I had to pay a deposit for my daughter's school for next year. My wife's got a business trip that she's extending into a personal trip to New York. And oh yeah, there's a deposit paid for a holiday next year as well. So just like together, that's like 4 grand. So just I'm actually running on fumes at the moment in my personal account. So hopefully that will get fixed fairly soon. But it just means there's no money available for stocks. So it's what it is. In terms of dividends here, this is dividends that I've received since the 17th of October. Pretty solid. Yeah, no real complaints. My yield across my whole portfolio is about 2.5% at the moment, so on the lower side. But that is because I've got a reasonable exposure to both growth and tech stocks, as well as the fact that some of the ETFs I've been buying don't distribute, they just accumulate. So actually my dividend yield has gradually drifted down. Overall, my estimated yearly dividend's about 2.9k, so on a 115 account. So just to get that out there as well. Anyway, in terms of what I've been buying with those dividends, let's have a look at that next. All right, so where I haven't added any deposit here, this figure matches the dividend figure. Firstly, in terms of GAMA, Games Workshop, Micron, and Fevertree, I basically just reinvested those dividends. The rationale here is quite crude, but effectively it was, if I can average down, I'm going to buy them. To be honest, though, I still think GAMA and Micron, especially those two, are absolute screaming buys for different reasons. I think GAMA is one of the best telcos you can buy. A small growth company, but still a well-established and worth your consideration. Micron is obviously in the semi space, which has been a bit underloved. When I bought this, it was still quite red. It's now got turned green. But again, I like the company here and the specialisms. I expect it to be in high demand for a long time. Games Workshop is a bit more interesting. I still think it's a really solid company. It's definitely been having some growth pains as it kind of sorts out its logistics as well as its shipping. Things like chemical costs and petrol, oil, etc. impact it as well, because it basically makes plastic. And so it's had some challenges for sure. And its numbers have reduced, but even still, these numbers are still absolutely astonishing. They're just slightly less astonishing than they were before. So again, very happy buying GAMA at these prices. It's also had a bit of a run up this week, as we'll see. But again, I was when I was buying this, it was quite deep in the red. Now it's just slightly in the red. And Fever Tree, to me, has got worse problems than Games Workshop, but they're kind of similar in terms of its logistics and freight. However, its glass cost has been really substantial, and they have struggled to me to execute their strategy, which should make a lot of sense in terms of the premiumization, as they call it, of the drinks market. However, I still think it's worth putting money back into the company. I haven't entirely lost faith in it yet. It's just my multiple that I'm willing to apply to Fever Tree is significantly reduced since I was like really excited a couple of years ago. So yeah, that's the rationale here. So I guess there is some fault. It's not just like it's red, let's average down. I think you should at least think a little bit beyond that. But for me, I'm happy buying these companies still despite being red. I haven't lost conviction. Maybe to some degree with Fever Tree. The other three I think are still absolute buys. And then with my dividends that I received from Kainos and Apple, I put them into a couple of funds, so Scottish Mortgage Investments and this iShares Clean Energy as well. I basically, I'm green on Kainos and Apple, Kainos especially now quite a lot. And so I just decided that I was happy with my position size for now. I don't actually think Apple is a screaming buy at the moment compared to the rest of the market either. And Kainos trades on a really hefty multiple, but I think it's completely worth it. So again, but you might decide it's not. But in either scenario, I just decided I could put my money to better use elsewhere, putting it in the fund. So that was the rationale there as well. All right, so first of all, this is my full portfolio breakdown of all my active holdings at the moment. The week-on-week comparison is technically a long time ago now, so almost a month. The trading for this is just going to be a reflection of the dividends and then plus or minus in terms of real values and the percentage change. So, I mean, the top couple here are really substantial. There's some huge swings across. I would actually say like even some of the ones towards the bottom, like Amazon being down 11%, is quite substantial. And just to be clear as well, when we look at the percentage change, not only does that include share price movements, it will include FX movements as well. So this is my total overall change. So it won't necessarily align perfectly if you were to like check the stock movement changes between these two periods, because you'd also have to factor in the FX movements as well. So just to put that out there a little bit. Now, originally when I was going to do this, I was going to go through like quite a few earnings updates, and then I realized that the video was just going to be obscenely long. So this week I'm basically going to do a special video that I'll release either Saturday or Sunday. I've already done most of it in terms of the notes. I just need to record it, where I'm going to be going through my whole portfolio, talking about the earnings. Maybe I'll do like 1 minute per earning or something. It might be an interesting challenge to try and keep it quite structured, but effectively doing a summary of how I saw the earnings for the likes of AMKR, the likes of Disney, and you know, there's a few others as well in here that people have specifically asked me to look at. Evraz has been asked specifically to me, as well as there was another one that got asked for me as well. I can't remember which one it was now. Oh, Huntington as well has also been specifically asked. These are like companies that I guess I have a reputation for like being bullish on or having opinions on, that are going through their various journeys. So I will maybe give them a little bit extra love than just a minute. But there are literally you know, well over a dozen earnings updates since I've been away, and some of them had really substantial impact on the price movement. So for now, this is just basically the change month on month, so I can get back into my regular rhythm. We will be going back to a weekly video, but I thought that was the best way to do it basically, and that's what I'm going to do anyway. It's my channel, so we'll go with it. In terms of the top five, though, we'll just give these a little bit of a mention, considering this is going to be a relatively short video. So AMKR is a real conviction for me. It's the second largest holding now after the run up, and it's not a million miles away behind GAMA, which is my largest. AMKR, I would say, had absolutely incredible earnings. Like it's up 40%. I think it's still ridiculously underpriced. Like for me, I would add 50% to its share price currently. I've been saying for some time now it should be 36, and that was before the latest earnings. I just think that there isn't enough appreciation for what's quite a niche semiconductor play. But you know, when you look through their earnings, even like underloved sectors at the moment, things like automotive and personal computing, we're seeing comfortable double-digit growth. And then some of their more, you know, their market-leading stuff around packaging and 5G testing, etc., is like 35% growth. It's really starting to reach its like scale, opening up a new factory in Asia. So it's just starting to really hum. Its EPS is really impressive. And when I was looking at this, its current PE was under 7, which I think even in like a cheap market in places is an absolute steal. So yeah, AMKR I think is just sleeping. It has had a significant run up since it was like down in 16s. Now it's on like the 25s. But again, for me, I think it should be much higher. GENI, I would also say, had a good result. This share price has been all over the place. It's like it ran up a little bit in advance of the results, and I'm always kind of curious to see what happens with like smaller companies in advance of results, because there must be some kind of like information leakage. I see it all the time. Like share prices will kind of correct after the earnings, but they'll react one of two ways, and I'm pretty sure it must be like, oh yeah, that's probably going to be the case. Like somebody whispers and it gets through to like analysts who, or people who buy and sell. So it was interesting because Genius actually went up quite far. Probably got a little bit ahead of itself, to be honest with you, but still, I think Genius is verging on starting to turn into a mature business. Like the earnings calls are quite mature. It sounds like they know what they're doing. It's sensible, it's organized. They're just about to turn a profit, which is, they're verging on being a quarter ahead, and that's despite the impact of FX, which has been negative to them. I like the fact that they published the results before and after FX impact as well, so you can really see it. But yeah, look, overall, I overpaid for Genius. I now realize in hindsight, having been an investor for 2 years. But I still like the premise. Since January, when they had an investor day, I've been really impressed with their direction of travel. They're basically delivering exactly as they said, and they're running slightly ahead of it as well. So I actually was a bit disappointed, having seen it run up, that it then went down after what were really good results. But okay, I think it had got slightly far ahead of itself, so there was an adjustment element there. In terms of the other three here, I think this is kind of sentiment driven. So Games Workshop, like I say, I think it's been beaten down too much. Again, it's still got margins that are better than big tech. It still enjoys huge opportunities in terms of scaling, in terms of basically having a niche, right? It's its own product effectively. I think the lore here, as in LORE, is really exciting. I think there's going to be a new Warhammer edition out likely next year. If you look at how regularly they update, which always causes a big surge in revenue as well. These are like big updates to the lore basically. And yeah, I think that although they've had some challenges, things like improvements in shipping rates and their logistics is all getting up and running now, and they've basically invested quite heavily over the last year or two. I think that's all going to come through, so I'm sort of expecting this business to really accelerate. And yeah, I'm very happy, even though I'm down like 10% still on this holding. I think even after the run up, by the way, over the last sort of 2 weeks, I'm still down 10%, but I still really like the company. GAMA likewise is my strongest conviction holding. It is still my largest position, even though again I'm down reasonably in the red. It's in my industry. I know the company really well. Again, I don't even think I overpaid for it. I just don't think it's been recognized for the quality company that it is, and it's built a really scalable position for itself. So I'm expecting GAMA again. By the way, another company that puts out incredible numbers that goes under everyone's notice basically. So fine, but again, I think it was broadly sentiment driven in the wider market. And TROW, especially, like of all the companies that saw changes, I would say TROW was the most difficult for me to understand. It basically makes money from its assets under management, right? To simplify it quite a lot. And yeah, okay, the share price has run up a little bit, which should improve asset under management, but really the kind of underlying position of the company hasn't changed. I personally believe that TROW is like multiplicative. So in bull markets, you basically get a leveraged almost position where you kind of do better than the underlying trend of the market, and vice versa in the bear case. So I do think TROW had kind of got ahead of itself last year, touching like $200, whatever it was. Now it's come back down again, but it fell way too far. This is still a really good company. It's still growing its dividend. It's still got lots of money in the bank. I don't really have any long-term concerns for this business. It's really solid as far as I understand it. And again, so I saw it like jump up like 16% in a day on Thursday, and I was like, well, somebody's kind of closing positions, or it's like reassessed, or just he got caught up in the kind of euphoria of the wider market. So I was talking to someone today about whether they should sell TROW, and I guess I can kind of see where you're coming from, but like only if you truly believe it was sort of fair value before and now it's too expensive, which I don't really think it is. I think it's just like a more realistic readjustment, and I still think TROW is a good long-term hold, solid dividend payer, and everything else. So, but the bottom three there that I mentioned, Games Workshop, GAMA, and TROW, as far as I can see, there's no sort of major updates that would explain those changes. AMKR and GENI, and AMKR especially, but GENI as well, I think, had very good results that at least helped underpin that increase as well. So I just wanted to touch on that top five. Probably on Sunday, I'll release a update of addressing, basically every earning I can find, and I'll give a little bit of extra attention to the companies that people have asked me to review as well. So if anyone wants an extra review on any of the companies I didn't just mention, just drop me a thing in the comments, and I'll make sure to give it a little bit of extra mention just to reflect that. Anyway, a bit of an update. It's good to be back. Thank you very much for watching, everyone. I've been the Boss Hog, and good luck with your investing. Bye for now.